Hi, good morning. I'm Ben Spry, Optimisation Desk Manager here at npower, and welcome to today's market report. Okay, let's start with the headlines then. Gas and power prices have nudged a little bit higher against Friday's close. Norwegian maintenance kicks in, that is squeezing the UK gas system. And a weaker euro and lower Brent oil prices just capping those gains that we're seeing at the moment. So those are the headlines. If you do need more information, please contact us on the email address provided. But for a little bit more detail, please continue to listen. Okay then, as mentioned in the headlines, gas and power prices have just nudged a little bit higher in early trading against Friday's close, and that's as a result of a short gas system with line pack currently predicted to close around about 11 MCM short. We had a planned maintenance at Troll in Norway started on Saturday, due to last until around the 23rd of July, and that's really limiting those flows from Norway into the UK. Lang-led flows down around 25 MCM from Friday's levels. BBL flows, so from Holland, still continue to be at zero. So having to rely at the moment on LNG flows around about 29 MCM, higher UK continental shelf flows, and reduced exports to the continent, reduced by about 8 MCM against Friday's levels. And so those higher UK spot prices that we're seeing this morning really trying to attract those flows to the UK as opposed to sending it out to Europe, so keep an eye on those flows there. In terms of power, tighter peak margins expected today, around about 10 gigawatts. The peak gas-fired generation still really leading the way there in terms of the most generation. Wind a little bit subdued, around 1 gig at the moment, but forecast to increase as we go through today, and actually remain quite healthy, certainly out until Thursday. If we look at kind of further afield onto the curve, as I mentioned, Brent oil has lowered a little bit this morning, and it's actually broken back below the $60 a barrel mark as a result of a weaker euro against the US dollar, but also concerns about the Chinese markets. Certainly in terms of the stock markets, China announced emergency measures over the weekend following a 30% fall in value since June, and real concern there in terms of global commodity markets, with China being such a large user. Clearly remaining in the headlines is Greece. The no vote over the weekend in terms of their referendum to accept those austerity measures, and that's just continued to weaken the euro, with £1 buying you just shy of €1.42 at the moment. So all eyes remain on Greece, and over the next couple of days what that'll mean in terms of them continuing to be part of the single European currency. Okay, that's it for today. Just a reminder then, gas and power prices up a little bit as a result of that short gas system, but that weaker euro and weaker Brent oil price just capping those gains at the moment. Have a great day. We'll see you again this time tomorrow. Bye.